Commit to Wealth Nation, welcome to the Commit to Wealth podcast. I am your host, Juan Vargas. Today on the show, we have Tys Crandall. Ty is an international speaker and author and probably best known as a business, credit, and finance expert. Tys Crandall is the CEO of a Credit Suite, a firm dedicated to helping entrepreneurs obtain business credit, loans, and credit lines to help their new or existing businesses. He is the author of Business Credit, Decoded, and Perfect Credit. Discover the secrets to having exceptional personal and business credit scores. Ty, welcome to the show.
Well, thanks for having me on, man. Excited to be here.
Yeah, thank you so much. And why don't we get started by telling us, a little bit about where you're calling us from, and then tell us about your background, and we'll kind of fast forward to today.
Sure. I'm calling from Tampa, Florida, actually right outside of Tampa, Florida. This is one of our headquarters. We actually have an office in Liberty Lake, Washington on the other coast as well. And, I actually got my start as an entrepreneur. I owned a mortgage company. So I was a mortgage broker for a long time, owned a mortgage company, and I was there at the height, and I was there where the whole thing collapsed. So I found myself really quickly at the wrong place at the wrong time. And I think I made a lot of the mistakes that entrepreneurs make where I personally guaranteed things for my business I didn't need to. I obtained credit that reported on my consumer credit reports. So what inevitably happened to me is as the business started to falter, some of those things that we started to go late on reported on my consumer credit reports. And then that just tanked my consumer credit, removed all my available credit. Business debtors came after my personal assets. Like the whole thing was a mess that pushed me almost all the way to personal bankruptcy. So I would start a consumer credit company after that. And I built that and sold that many years ago, discovered along the way what business credit was. And just kind of got frustrated that nobody was out there talking about this and that it could have helped solve so many problems for me and help me avoid so many nightmares that I faced, that I decided to kind of be the advocate and help others. So here I am now. We've helped over 15,000 people just the last few years and rocking along.
There you go. Awesome. So I guess we can get started with the basics of business credit, right? So I guess let's get started with the definition. What is business credit exactly, and how is it different than personal credit?
Well, consumer credit, almost everybody's familiar with. You have a credit report linked to your social security number. When you're old enough to obtain credit, you start obtaining credit and using that credit profile to get credit cards, mortgages, and loans. Business credit's exactly the same thing except it's for a business. So a business has an EIN number, and business credit's ultimately where a business is building a credit profile and score that's linked to the business's EIN number. So this is a separate credit profile and score that's linked to the owner's personal social security number. And the business can build that credit profile and score and use it to do much the same as consumer credit can. They use it to be able to obtain very high limit business credit cards, help it make it easier to obtain loans, credit lines. It can even individually and on its own be used to help people qualify for loans and financing, even including auto financing as well.
Got it. So why wouldn't we want to use our social security number on this business credit? Why not keep them together and kind of help build our personal credit?
Sure. Well, there's a lot of problems with that. For one, one of the core components of credit is called capacity. And, consumer credit, you just don't have as great a need of capacity as what a business does. So a perfect example of this is Dell, right? You never need to get $10,000 at Dell on a credit card because you're never going to put Dell, 10 grand in home computers in your home at any given time. Like that's not going to happen. But a business could need $10, $20, $30, $50,000 at Dell to put the computers in an actual office. So this is standard across the board. Consumer credit has limits per SBA that or a tenth or a hundredth of what business limits are. So business credit card limits are 10 to 100 times higher because these businesses have a greater appetite for capacity. They need access to more capital. The problem is when people try to use consumer credit to fund businesses, the limits on the credit cards they're using are way less than what they actually need because they're using it for what it's not intended or designed for. And the problem with that is 30% of your consumer FICO score, almost a third of your entire consumer credit score, is made up of one factor called utilization, which means as you put balances on credit cards and the balances increase in relation to the limits, the scores drop, sometimes plummet, even with $100, a few $100 additional because the limit to the balance ratio is so high. So bottom line, the simple answer, it's not designed to. Business credit was designed for businesses to fund themselves. Consumer credit's not designed to fund businesses. we see business owners try to do so. They max out their consumer scores, they ruin their consumer scores, then their ability to use that credit to get all kinds of loans and credit lines that they could have gotten is now gone because they used it to be able to fund the business when they shouldn't have. So that's a common example of what we see, and one of the reasons it should be avoided.
Yeah, that makes 100% sense. If you are using your personal credit or your consumer credit, I should say, then it kind of limits you on many different things. And whenever you're trying to apply for something else on your personal credit, and you really want something as a personal, you want to go get some furniture, a house or whatever, then it's going to show like you have high spending already, and so it's going to limit you right there. So it's always better to kind of keep it separate, like you mentioned. So how do we go about opening an account? Like what do we have to do?
Well, the very first thing to do is to be aware, to understand that there is a difference, right? 90% of entrepreneurs don't even know about business credit. So you need to be aware that businesses have their own credit profile and score, and that credit profile and score is going to be used to judge your business the same as your consumer credit's used to judge you whenever you apply for any kind of financing. You need to know that going in. Moving forward, any business credit card, any business loan, any business credit line you apply for, they're more than likely looking at your business credit. You also should know that anybody can see it. Unlike consumer credit where somebody needs your permission to actually obtain the credit profile and score, in the commercial world, anybody can see this. Your competitors, your prospects, your clients, investors in your company, it's public information. And what's even worse than that is that when the reporting agencies like Experian and Equifax know you exist, they create a credit profile, immediately issue you a failing credit score, because in the business world, you're deemed extremely high risk just because you don't have a credit profile and score established. So this is something you need to do early on in a business, because if you don't, you will run into severe consequences with your lack of ability to obtain the financing and credit you need, and probably being unfairly judged by a lot of other sources, including suppliers, insurance agents, et cetera, who are pulling that data. So first, know it exists and know that it's going to be looked at often. The second step is to know that lenders and credit issuers have a secret set of standards that you really need to meet to be able to get approved. And Juan, we're familiar with this. I mean, you and I have applied for credit cards. We've got an immediate approval. And then we've applied for a credit card and got that dreaded message that we'll hear by mail in 7 to 10 days, which I don't know about you, buddy, but that's never been good for me. Like, that letter's never been a positive congratulations, you're approved, ever. So what's happened is these computers are using algorithms to look at our application and look at the information we're entering, cross-check it against standards they have, and issue immediate approval or push for manual review. Manual review usually results in a decline. That's why it takes 7-10 days to get that to us, because they have to manually review it. So our goal is to build credit where we get automated approvals without needing to give a credit check or any of those other things involved. And that happens by setting up your business credibly right from the beginning. So we call this business legitimacy. And business legitimacy really has to do with the standards that lenders and credit issuers have that you must meet to get approved. So some examples here is that you need to have a business address, not a P.O. box or UPS address. You just can't use those. Okay. If you use P.O. boxes and UPS addresses, they're housed in a database that lenders and credit issuers check, and oftentimes immediately issue denials just because they even know that you're using one of those kind of addresses. You're better to use a virtual address or a home address at last resort versus using those other kind of addresses. You would never want to use a mobile phone or a home phone as your business phone number on an application. You want to get a real business phone or a voice over IP. For some reason, Google Voice creates issues with some lenders, so try to avoid that. And get the phone number listed with 411. That's one of those little known nuances that lenders and credit issuers have that they looking at to approve you. They see a legitimate, credible business as one that has their phone number listed with 411. So get your phone number listed with 411. Get a fax number. Okay, nowadays you can get an e-fax. Your fax number could be your phone number at places like Ring Central, but get it. Make sure your phone number is toll-free. Get a professional website. Make sure your website clearly explains what you do. Lenders are going to look at your information online. Make sure you control what they're looking at. Don't have them getting your information from everywhere somewhere else. Have a professional email address like your name or info@yourcompany.com. Stay away from Yahoo and Google type email addresses. Any necessary licenses that you need, you should get. You have to set up your business bank account so you have a bank reference that's oftentimes going to be asked for, even if they don't ask for your actual bank statements. Set up your actual entity, get your EIN number. So there's a lot of things related to business legitimacy. But one, that's really the first step, is to know that it exists, then take that first step of building this business legitimacy so you have the perception of being a legitimate, credible operation per the lenders and creditors that are actually going to issue you credit and financing.
Yes, and you mentioned that it's not advisable to have a PO box in maybe a UPS store or something like that. Why is that exactly? Why can't we have something like that? Especially for the guys that are just starting out. I guess you can have a virtual address, like you said, but many guys don't have like a brick and mortar type place, or So what is the reason behind that?
The way I explain it's like this. It's not that you have to do anything, right? It's just when you know lender and credit issuer standards, it's like every little check you don't have gets you no's, which are denials, right? So, for example, you can use a home address, but Walmart won't approve you with a home address. It's just one of those nuances. It's their thing. They won't do it. So you can go and get, plenty of other sources. You can get Best Buy and Sam's Club with a home address, but you can't get Walmart. PO boxes and UPS addresses are a little bit different. PO box and UPS addresses back in the 80s, our government decided to house these in a database that lenders and credit issuers could look at so they could verify whether there was a real physical address for the operation or whether or not they were using somebody else's rented email or rented address. Well, at that time, the virtual address companies, Alliance and Regis, bit back hard. They fought and they won. And so they actually managed to keep virtual addresses out of this database that lenders, credit issuers, insurance providers, all of these sources are looking for. Now, again, whether they approve you or deny it, it just comes down to this. Does a business that is operating in a high-rise building in Tampa, Florida, have more credibility than a business that's actually working, using from home and using a P.O. box? Of course it does. So that's the way lenders and creditors look at it, is that especially when you have no business credit, they're a little scared, they're not sure, you don't have a great history behind you, well, then they start digging into these aspects to see how credible you are. And like I said, a business that's operating in a big high-rise building in Florida is more credible than one that's using a UPS or a PO box. They see those as smaller businesses and inherently higher risk. As a matter of fact, there are financial risk scores from the reporting agencies that will actually punish you because you have fewer employees, meaning that they look at companies that are bigger as companies that are less of a risk. And so as a result of you having less employees or working from home, these are just factors they look to be as newer businesses. And there's plenty of funding and credit that may be available for newer businesses, but there's plenty of funding and credit that's not. That just because you have that and paint that perception, they will not approve you for credit or financing. So that's the key. So when you're using PO boxes or UPS addresses, there's just fewer sources that'll approve you. And why do it if you could just rent a virtual address, pay a little bit more, and have the perception of having a real physical address without having the drawback of it making you hurt credibility? It's the same thing with customers. When customers search that address, they know you're using a UPS address. They know you're using a PO box. So it's the same thing. I mean, if you're looking at doing business with a company and you see they're in a really big office building and you see another one using a PO box, you're going to be skeptical of the one with the PO box. It's the same way lenders and credit issuers are.
That makes sense. Yeah, it gives you a lot more credibility. It gives them more of a ease, and so they're gonna want to do business with you, right? So that makes more sense. So now I guess we could talk about who the lender is. Who's the lender? Who is the guy that's giving you the credit? I mean, who's the
well,
ideal
the next
person?
step, I mean, after you've set up that business credible, then the next thing you want to do is start getting credit that actually reports to the business reporting agencies. In the consumer side, this happens by default. Like if I go into Target, they say, hey, you save 20% if you get a credit card. You're like, oh, I want to save 20% because like my kids just bought a bunch of toys, so I'm going to do it. It's offered to you everywhere. Business credit is kind of secret and hidden. You have to know that. Here's the reason why. Because by keeping it kind of hidden, then what happens is medium and larger businesses that get CFOs, that get controllers, that get financial savvy people, those guys get in there and go, whoa, dude, you can't use your social. We've got to build the corporate credit. They get it. So they help the bigger business. So by default, bigger businesses find this because they have financial savvy people in the organizations that help them do so. Smaller businesses don't. And the credit issuers like this world. They like where by default, small guys don't even know about it. And by default, bigger guys they want to approve do. They just kind of win that way. So that's how the system actually works. So the first thing we've got to do is intentionally build business credit by intentionally finding credit issuers that report to the reporting agencies. Now, this is called a vendor credit tier. So this is kind of broke down into different tiers of credit that you can actually get. And the first real tier is called the vendor credit tier. Now, the vendor credit tier is where you're getting credit with trade vendors that report the credit to the reporting agencies. These trade vendors are very unique because they report the credit to the business reporting agencies. Over 97% of trade vendors don't report. So a lot of people think they have business credit only to find all the people that have given them credit in their local community don't report the credit. It's very common. So they've got to report. And two, they got to give you credit even when you have none already, right? We already know you need credit to get credit, right? You need money to get money. So how do you get the credit when you have no credit? You got to find these vendors that will give you credit when you have none. So some examples here are Uline, Quill, Granger, Gimplers. So what's unique about these companies is that they'll do both those things. They'll report the credit to the reporting agency. They'll give you credit when you have none. So if you look at a Uline or a Quill, sometimes they make you place 1 or 2 orders. Sometimes they'll approve you right on the first order. But what happens is you go find stuff you want to buy. Quill's office supplies, 1 million products. They have marketing, flyers, yard signs, everything you could use. So you go get stuff from Quill. You put it in your cart. You open an account. You choose to be invoiced, and you're done. There's no big celebration. There's no big approval. They either notify you by email they shipped the item, or they notified you by email that they didn't approve you. And if they didn't approve you, buy the stuff with the money, actual cash or credit you have, then go do it again. By the second or third order, they will approve you. Then as soon as they ship the item, you pay the bill. Because business credit scores are primarily based on how you pay. So the one thing you want to do is pay your bills on time or early, get you good scores, and then they report the credit. The credit reports 30 to 90 days later, you have your first trade line. You'll need about 5 of what are called trade lines, these accounts reporting on your business credit reports, to move to the next tier of credit, which is really a retail tier of credit. And with retail credit, what you're ultimately doing is you're getting credit with the major reporting agencies. So with a retail credit tier, you're getting credit with the major retailers. So Amazon, Staples, Office Depot, Home Depot, Lowe's, Best Buy, Sam's Club, Costco. Those are all major retailers that will then start to give you credit without a personal guarantee and without a personal credit check. As long as you have those 5 accounts initially established through vendors, then you move on to the fleet credit tier. The fleet credit tier is BP, it's Chevron, it's Sunoco, it's Wex fleet cards. These are, maybe not for a lot of the people in your audience, for the truck drivers and people that have fleets of vehicles and people that spend tons of money on gas and maintenance and repairs. So you have about 8 or 10 accounts, you're starting to get that kind of credit. And when you have about 10 to 14 accounts, you get to the final tier, which is called the cash credit tier. And the cash credit tier is when you start to get the Visa cards and MasterCards and American Express cards and auto vehicle financing, all without a personal guarantee or credit check. So as you see, Juan, it's really about, once you set up the credibility, moving through the tiers is all about how many accounts you get that report to the reporting agencies. The more accounts you get, the more types of credit open up, the higher the limits are on the subsequent credit that you continue to go get and apply for and use. Wow.
Yeah. So I can see the many benefits to doing it right. And, you can easily grow and build your business credit. It's awesome. So let's talk about the average terms, like for the average, business, right? So what kind of terms are we going to get, and what are the interest rates?
Well, it's pretty similar to consumer, and I kind of see this back and forth. I always kind of say they're a little higher than consumer, but then I dove into this last week just to check my facts, and the newest survey data actually has that business rates are a little lower. They're undercutting consumer rates. So look, they're back and forth, right? But the bottom line is they're pretty similar to what you're going to pay on normal credit card rates. You might get 0% interest rates. You might get points for, so many points, double points. Those things are very similar to consumer cards, and the rates are very similar. The huge difference is that with commercial credit limits, they're just much higher. I mean, we see clients get $10,000 limit credit cards 60 days into the process, 2 months into the process. You would never see that with consumer credit. So it's very fast to build very high limit accounts very quickly. 10,000, 5 to 15,000 within 30 to 60 to 90 day time frame. You're 90 days, 3 months to 6 months, you're jumping up to $10,000 to $50,000 individual limit credit card. So an audience of people, for example, flipping real estate or buying real estate, you're using the Home Depot, you're using the Lowe's for the maintenance, for the repairs, you're using that stuff for air conditionings and all the work on the properties when things get broken and break down and you need to fix them or rehab them. And you're using the Visa card, the MasterCard, the Amex card just for cash stuff that you can't buy at Home Depot, etc. So it's very good we have clients that buy apartment complexes using their cash credit, that are actually liquidating those cards and using them, all the way through to the store retail credit, which could be used great for fix and flips or even just for maintaining properties ongoing. These high limit accounts are very valuable.
Okay. And is it easy to increase like your credit limit? I mean, as if you're showing that you're paying on time and, you've had it for a good while, can you easily call your vendor and then ask them if they can increase your limit?
Yeah, I think you should. I think on the consumer and the business side, I think you need to make a habit every 6 months to call your credit issuer and ask them to raise your limits, because on the consumer side, 30% of your credit score is your utilization, right? So you want to keep those limits as high as possible. And on the business credit side, even though utilization isn't a big factor into the score, the more available credit you have, the better. So I find in the business world that they are much, much more eager to raise your limits substantially than consumer. My consumer credit cards, they raise my limits. They do it without me even asking. But business, it's not uncommon. Like American Express will, no matter what I ask them for, they give to me. So I'm going to start changing my strategy, because my last strategy was I'll ask for double, and they gave it to me. They just doubled my credit limit. So I'm like, all right, I'll ask for triple next time. I'm going to find what I need to ask for where they'll finally tell me no at some point.
You gotta test your limits, right? See where they stop.
I'm trying. I'll report back to you too. Amex's cutoff is a 450%. I'll know it soon enough.
Wow. So you mentioned Amex, right? So we have, Amex, Chase, Bank of America, these consumer type credit cards that give you rewards, right? So we're able to use them. You get some kind of rewards, either travel, cash back, whatever, right? Is it the same kind of principle on the business side?
Same kind of principle. Rates are very similar. Rewards and points or those types of things are very similar. The biggest difference, like I said, is just that limits are substantially higher because credit issuers know and expect that you use these credit cards more often and carry substantially higher balances than you normally would as a consumer.
Got it. And so for my audience, because, the majority of my audience is in multifamily. So I think that, having business credit for your projects, if you're a smaller investor where you're maybe buying a fourplex, a 6-unit, 10-unit, you can definitely use this and do a lot of the CapEx repairs and, just build up your credit that way. Now, if you are a multifamily syndicator where you're going to buy a 100-unit apartment building, then I think you can still use it and, you can put on all the CapEx repairs and a lot of the monthly bills, you have the trash, the water, the electricity. You can pay that using your company credit card or your company business. So it'll help you build some credit and it'll help you build some rewards and some points. So I think it's very beneficial. So now that we're talking about this, what is the ideal company structure that's better for this? Is it LLC? I mean, what kind of company is better for this?
Any entity can build business credit, but LLCs are not really officially deemed an entity, but an LLC or a corporation are the best to choose because they are separate from you in the business. So a sole proprietor partnership, you are the business. So you're always going to be liable for what happens in the business. But, if you're an LLC, if you're a corporation, you and the business are separate. So you create that level of separation. And that's one of the guiding principles of business credit is to create the liability separation, create the credit separation. Here's your consumer credit. Here's your commercial credit. You're liable for what you use your consumer credit for. You're not liable for what you use commercial credit for. This is why Inc. and Entrepreneur and SBA, this is the reason they recommend it, is for the separation of that. But as you mentioned, not only can business credit directly be used for the repairs, for the maintenance, for the purchasing of the actual apartments, for multifamily property, single property, whatever it may be, but it's also a guiding huge factor of the financing you get. So if you're going to go in and get any kind of loans, any kind of financing at all on the real estate that you're buying, they're going to use your business credit. They're going to look at that. That is determining the rates you'll pay. It is determining if you'll get approved. It is determining how much you'll get approved for. The reporting agencies even say on your business credit reports how much you should be lent, how much credit they're recommending you be given. So even with other kind of financing you get outside of the business credit world, your business credit quality will control whether you get the money, the rates, and terms you pay, and how much you'll get.
Got it. So what happens if we default? What happens, if we're paying and then, something goes wrong and then, we haven't paid in 2, 3, 4 months? What happens then?
Well, business credit scores are primarily based on how you pay. So the good thing about them is all you have to do to maintain good scores is pay your bills on time. Business credit scores have this little nuance called weighted average, which takes your highest limit accounts and weighs it heavier into your score than your lower limit accounts. So in the circumstance you describe, I would always recommend, if you have to go late, communicate with the credit issuer. They may give you some kind of leeway, or go late on the lowest limit accounts first, because that'll create the least amount of damage. From there, how late you pay determines how low your score will be. So an 80 paydex score from Dun & Bradstreet literally means you pay promptly, you pay on time. A 70 means that you're paying on average 15 days late. So for example, if you're paying, 30 days late, you might have a 60 score. How late you're paying on average of your bills will determine how low your score will go. So this is why you really want to focus on building your business credit, because the more positive accounts you have, the more you can go late on one accidentally, maybe two, and the positive outweighs the average of the negative, and you still can maintain pretty good scores. The problem occurs when you don't have much business credit. Then you go late on the limited that you have. That could be devastating to your score, since your score is just an average of how you pay.
Yeah. So I guess, to add to what you said, I think it makes sense to have like the more you have and the more that you can safely pay back, then the better, right? It kind of makes sense. So if you're, just in case you do, you are a little bit late on one of them, then you have the others that kind of make up for it. So that is good. So what about the costs? What does it cost to apply? What is the process like that, on the very front end?
Well, okay, there's no cost on credit cards. Credit cards are exactly the same on the business as there is the consumer. There's no cost to apply, et cetera,
Okay.
things like that. Look, it's obviously we're in this business, and if you're working with a company like us, it's just easier because you know who things report to, et cetera, et cetera. But if you're doing it on your own, I've already kind of mapped out some of the vendors to go in to get approved for. Once you get those vendors, then the next step is to go and find the actual revolving sources you want and start applying there. Now, some may require you have 5 accounts. Some may require you have 10 reporting to approve you. So the only way you're going to know if you're doing this on your own is to kind of go through the trial and error process of applying and maybe getting denied, apply somewhere else and get approved. Finding the ones that you have enough trades to get approved for as you move on to the other ones is really the key. And each one of them has a commercial division. So Staples has a commercial division, and you could do some basic research into Staples commercial card or Office Depot commercial card. And that research should get you to a point where you can kind of find their back door in to apply.
That makes sense. Okay. I think it is time for our Nuggets of Wealth. And these are questions that I ask every guest every week, and hopefully they are able to help our audience. So question number 1, what key tip or advice would you give to newer business owners or investors that are looking to build their business credit?
Well, I think the first advice I give is that there's a lot of money available that a lot of people just don't know about. Outside of even business credit, look into other programs out there. Like there's a great program we call unsecured business financing where you can get up to 150,000 in cash credit at 0% for 6 to 18 months. So we have people that get that kind of financing, use that to make their initial purchases of their investment building, for example. So know that money's out there, including business credit. This is credit you can get even as you start a business. Within 6 months, you can have 50 to 100,000 in real usable credit you can use to be able to fund exactly what you're doing. So I think that's my best piece of advice is know there's a lot of money out there. You just need to find the right kind of money for the industry that you're in and what you're trying to do. And whether it comes to loans, credit lines, and business credit, just know that there's a lot of that financing available right now for entrepreneurs.
Got it. Great answer. Okay. So then if you guys are looking for that, then he's the guy. He's the guy to help you out. So definitely reach out to him. What is a good tool, source, or platform that you use almost every day that can also help others?
I use Audible pretty much every day. There's two things that I'm probably on every single day. One is Infusionsoft, which is our CRM, which does a lot of things for us, which is pretty powerful. And I'm on Audible. I listen to a ton of audio books. I finally got it. And I like it because I can adjust the speed, depending on how slow the author talks. I'm at 2 to 3 speed, so I can make it through books fairly quickly. So those are two of my daily resources I go to.
Sweet. What was the best business advice you ever received?
I think that it's tough because I've received a lot of great business advice, but I think one of the biggest things that I've learned along the way, and I don't know if I've really been taught this from mentors or from experience or both, is that you just have to expect to fail. I mean, you're going to run into failures. You're going to run into obstacles. You're going to run into issues. What I really seen as being the difference between a truly successful entrepreneur and one that just doesn't make it is how they deal with those things, how they deal with mistakes, how they deal with failures. The ones that become truly successful are ones that learn aggressively from that are humble, that know they don't know it all, that learn from those mistakes, that will learn from others, and then take those lessons and apply it to avoid having problems in the future. And then the other side of it is the people that are just victims and things always happens to them and, it's out of their control. So one of the best pieces of advice I've had is be humble. It's okay to fail, but you just have to be willing to learn from those mistakes and apply those lessons to avoid those kind of problems and failures in the future.
Makes sense. 100% agree with that. So you have written a couple of different books, and why don't you tell us a little bit about those books, and like that, my audience can maybe pick up one of those books and learn more about your business and learn more about, building business credit and how it can be beneficial for them and their business.
Sure. If you go to Amazon and search business credit, I'm pretty sure Business Credit Decoded will be the first book that you'll find. And it's just kind of an overview of everything you need to know about the business credit building system. Perfect Credit's an overview of the consumer credit scoring system and how to fix consumer credit and some information on business credit. But if your audience really wants the most and best information, our website, creditsuite.com/EIN. At creditsuite.com/EIN, there's a great 4-step guide that maps out exactly how to build business credit. And then at creditsuite.com, at the top right of our page, there's our social media links. And there's hundreds of videos on YouTube. We go live on Facebook every week, live on YouTube every week, teaching these concepts of how to get money for your business, how to get business credit, how to manage your consumer scores, your business scores, everything related to how to get the most money for your business at the best terms.
Makes sense. I think you pretty much already answered this, but I'm going to ask you anyways. Where can Commit to Wealth Nation go to contact you and find out more about you and your company?
The best thing to do is to head right to our website, creditsuite.com/EIN, grab your free guide, and then at creditsuite.com, check out those social channels for more training than you'll probably ever know what to do with when it comes to it.
Okay, well then I appreciate your time, Ty. It has been great. It's been a treat, and hopefully my audience can pick up, a couple of things here if they are looking to build their business credit. And I think, it can only help you, right? It can only help you, and especially if you want to keep growing and you want to, keep pushing and growing your business. I mean, that's what it's about, right? Growing your business, you got to have that business credit to kind of back you up, right? So hopefully you guys are able to pick up some things and take it from there. So once again, Ty, I appreciate your time, and I wish you continued success.
Thank you so much, Juan. I had a great time on here with you today.
Thank you so much.